Right, episode 6 of the series is going to be on order blocks. So, an order block is the last up or down candle followed by displacement to the opposing direction. So, yeah, an order block is the last up or down candle followed by displacement to the opposite direction. So, quite easy to spot. Let's find one that actually worked and didn't fail. Okay, so this candle here, we go body to body. You can do wick to wick, either one's good. Order block, tapped in here, retraced 50 points before coming back down and eventually trading back under, and then coming back up, and then going another 90 odd points. Obviously, a bullish order block will be the last bearish candle before big displacement up. So this one candle was 40 points. So this would be the order block, obviously because it's the last candle up or down, which is a down, followed by big displacement to the opposite direction. So this would be a bullish order block. So on the lower time frame then, say we had some sort of trade going on, could have got in here. If you were just entering off the order block, could have got in here. Stops just below the order block. And then target, this unmitigated fair value gap. And bosh, nearly 2.6R on that trade just off the order block. That's without any other confluences. Obviously, we had buy side swept. We tapped into some of the fair value gaps as well that I went on about on the previous video. So that's a bullish order block. Obviously, there's probably an order block here too. That might have got tapped. Obviously, order blocks happen on any time frame, so this would be an order block as well. You can either go body to body or wick to wick, whichever you prefer. And then obviously we tap back into this order block, come up, and obviously come back, and eventually trade back up into it, use it as a support, and continue up. So that's bullish. Let's try and find a bearish. Here, this would be an order block. This would be a bearish, because obviously it's the last up or down before displacement downwards. Comes back up, taps into the order block. If you're entering just off the order block, stops slightly above, targeting, this internal low, and eventually you would have hit TP for 150 points. So order blocks, they're quite strong, especially the higher time frame ones like the 5 minute. Obviously the 1 minutes, they're less likely to hold. Obviously they do as well. If you've got like a high time frame one and then look for a smaller time frame one, like this one for instance. This one here, another example. Or there's one here too. Obviously this one got tapped into, could have gone here. Obviously we did slightly trade above it, but it might have been a bigger order block. I mean, yeah, obviously this order block here, tapped in, come back down. Obviously, if there's two candles close together like this, you can use both, body to body. You don't have to use wick to wick. I normally use body to body. As you can see, price come all the way down, swept these internal lows, come back up into here, stops above, targeting some sort of low, or this unmitigated fair value gap, even a 50% of the fair value gap, and you would have hit TP. So it's pretty simple, it's pretty easy. I'll do a few more. They're not that hard to spot. This one wick to wick. As you can see, we come into this order block, we wick above, but we do not close above. So this is supporting this order block. Obviously, you would want to wait until this got swept first before entering. Knowing this got swept, you're more likely to come back down, and then obviously creates another order block here, which is eventually tapped into, enter here. Stops either above this high or above the order block if you're feeling confident, and then target internal lows. Quite easy, quite simple. Is 100 points or 4R if you're being safe, or obviously smaller stop loss, higher risk to reward. And this all went all the way into this 4-hour BISI here, this fair value gap here. So it's pretty easy, pretty simple. It's a pretty simple concept. You know, there's obviously the higher the time frame, the bigger the draws. This is an order block. An order block is basically, the more advanced term would be big institutional banks. They've probably got in somewhere here, and then they sell, drive price back down to get in another better price to hedge in their position to continue up. That's pretty much all it is, really. Obviously, we've got a 1 hour order block here, and there's one little one here. So we could see price tap into this and reject, or close straight through it, and then obviously your draw would be different if it closed through on a higher time frame. But yeah, that's pretty much it. It's pretty easy. It's not that difficult, really. Nice, quick, easy, simple video for today. Order blocks. That's it, basically. I'll link the Discord in the description and my TikTok. Please like, subscribe, and yeah, I'll be posting another one probably tomorrow. Probably inverse fair value gaps. They're pretty strong. I use them more than normal fair value gaps. But yeah, I'll see you tomorrow.